Ladies and gentlemen, good day and welcome to the Torrent Power Limited Q2FY25 conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Saurabh Mashruwala, CFO from Torrent Power Limited. Thank you, and over to you, sir.
Thank you so much. Good evening to all of you, and thank you for joining the earnings call of Torrent Power for Q2FY25. First, I will take you to the performance of the quarter, after which phone lines will be open for Q&A session. We'll explain the performance of the company at PBT level first, and then we'll take you to the tax expenses separately. Reported PBT for the quarter stood at 689 crores compared to 741 crores in the corresponding quarter last year, reduction of 52 crores, which is about 7% on a reported basis. PBT for the current quarter includes non-recurring credit of 67 crores on account of two factors. First, accounting of 99 crores on receipt of favorable order in the license distribution area, which mainly includes the carrying cost allowance, partially offset by lower generation from the wind power project on account of forced stoppage of wind turbines due to heavy rains and asthma cyclones witnessed in Gujarat during the quarter, leading to a reduction of contribution of 32 crores. Adjusted for this one-off, PBT for the quarter stood at 622 crores as compared to 741 crores in the comparable quarter of last year, reduction of 119 crores, which is about 16%. Business-wise factors contributing to this performance are as follows. First, contribution from thermal generation business reduced by about 80 crores, mainly on account of two factors. First, lower contribution from sale of merchant power and LNG of 35 crores. The country in general witnessed a lower electricity demand during the quarter, mainly on account of extended and widespread monsoon in the current quarter against erratic monsoons during the comparable quarter of last year. So in any way, in both the quarters are not strictly comparable. Despite the lower overall demand, the company was able to maintain almost same level of merchant volumes. However, margins were lower due to extended monsoon, keeping merchant price subdued. Second, additional contribution for thermal generation was also impacted due to higher O&M expenses and lower incentive on account of scheduled maintenance in the quarter. Second, non-cash adjustment on account of foreign exchange variation of 24 crores. The contribution from renewable generation adjusted for the one-off item reduced by 29 crores on account of first, lower PLF from existing wind and solar power plant due to lower wind speed, resources and irradiation respectively. Lower contribution from capacity of 274 megawatts commissioned during the quarter as the project is under stabilization phase. The operation license as well as franchise business compensated each other, and the segment as a whole remains stable in terms of profitability. Demand growth was flat during the quarter at 1% across all our distribution areas. Balance deviation is on account of other income and finance cost and depreciation. This completes the explanation of financial performance during the quarter. Moving on to the project update. First update is renewable energy capacity of 274 megawatts got operationalized during the year, taking aggregate installed generation capacity of the company at 4.5 gigawatt as of 30 September 24, comprising of 2.7 gigawatt of gas, 1.5 gigawatt of renewable, and 362 megawatt of coal-based capacity. The company was awarded pumped storage hydro projects of 2 gigawatt in an auction conducted by the MSEDCL during the quarter. Pipeline project as at the end of the quarter includes 3 gigawatt of renewable power projects and 2 gigawatt pumped storage hydro projects and 2 transmission projects at Khavda and Solapur. Further details on the pipeline projects have been summarized in our latest investor presentation available on the website. Moving on to the new ventures, first, company's pilot project in green hydrogen blending with a CNG in UP is expected to commission shortly. Further, the company has got allocation of 18 KTPA green hydrogen production under SECI PLI tender at an average PLI of 28.89 kg. Technical feasibility has been done and declared business plan is under preparation. With respect to pump storage hydro project, have identified project site with potential of 8.4 gigawatt for pump storage hydro in the state of Maharashtra and UP. Pre-feasibility study completed and MOF terms of reference has been granted for the entire capacity of 8.4 gigawatt. Agency also appointed for the EIS study. As informed earlier, we have been received LOA for providing pump storage facilities to MSCDCL for aggregate capacity of 2.2 gigawatts. That's all for the quarter. Now I would request coordinator to open the line for Q&A session. We wish everybody to stay safe and healthy. Thank you so much. Handing over line to operator.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, if you wish to register for a question, please press star and 1. Participants, you may press star and 1 to ask a question. Our first question comes from Mahesh Patil from ICICI Securities. Please go ahead.
Yeah, hello sir. Thanks for the opportunity. So my first question is with respect to the employee cost and other expenses in Q2. There seems to be some significant increase compared to Q2 last year. Employee costs are up by 18% and other expenses around 14%. So, any specific reason, any one-off items in this?
There is no one item. Normally increase are there because increase in O&M expenses for the higher merchant sale is accounted for. Normal staff cost increase is there. And the forex loss, which is a non-cash item, we have also booked as other expenses.
So, this foreign exchange item is around 24 CR you mentioned, correct?
Sorry?
Foreign exchange loss that you mentioned is 24 CR, correct?
24. In fact, if you look at the euro was about 90 rupees as on 30th June, went up to 94 rupees as on 30th September. It again came down to 91 as of today. So hopefully this will get reversed. It's a non-cash item in the Q3.
Okay. And so my second question is regarding this our Bhiwandi franchise area, wherein the agreement is expiring in Jan 27, and as we're almost entering 2025 now. Any plans and related provisions in the agreement for further extension?
So provision, the franchise agreement of Bhiwandi, when we last got renewed in 2017, there is a provision that with mutual consent it can be extended for further 5 years. So when the time comes on the 27, we'll again discuss with the MSCDCL for the extension. But the agreement provides the extension period of further period of 5 years with the mutual discussions.
Okay. So this will be taken up for discussion sometime in FY25.
Appropriate time we'll take it up with the MSCDCL.
Okay, sir. Thank you so much. I'll get back in the queue.
Okay, thank you.
Thank you. A reminder to all the participants, if you wish to register for a question, please press star and 1. Participants, you may press star and one to ask a question. Our next question comes from Amit Vinde from Morgan Stanley. Please go ahead.
Yeah. So I just wanted to know the exact quantum of merchant EBITDA that was there in the base quarter, because to the extent that I remember, in Q2F24, we just had around 25 crores of merchant EBITDA, I think so. And notes to the account said around 150 crores of revenue on that, which you used to disclose earlier. So now if I say 35 crores of difference, then we are indicating minus 10 crores of merchant EBITDA. I don't think that would be the case, right? We wouldn't be selling anything on loss. So if you can help us with the exact numbers.
In last quarter, merchant EBITDA was about, merchant profit, I would say, was about close to about 40 crores, 42 crores. And current, since there is a 35 crores reduction, about 7 crores for the current quarter.
7 crores is the exact. So we had, if I talk in terms of units, we had DGen generating around 180 million units, and apart from that, some small sales that you do from Sugen, etc. So would the number of units be around 200?
Or 300 MUs, 300 MUs.
So you sold 300 MUs and you made us 7 crores of profit.
Yeah.
Okay. Got it.
The market was subdued because of the monsoon season. This Q2 generally is always has an impact of monsoon. And
Okay.
this quarter monsoon is very widespread and very heavy. As compared to the last week, it was a very erratic monsoon, not that widespread. So demand last quarter or similar quarter demand was very strong as compared with the current quarter. So which has impacted the merchant sale also, as well as our wind and solar PLF also this quarter.
Then if I look at 300 units approximately sold, 7 crores of merchant EBITDA, we're just making a 0.2 EBITDA per kilowatt. That's like pretty low. I mean, then
if you look at the price also over the exchange also, it was lower as compared.
It was lower, yeah.
Price. Yeah.
Right.
So and if you compare by period also, it was a bit higher as compared to last year. So monsoon has impacted the quarter in terms of merchant volumes as well as PLF, wind and solar PLF also.
So if you look at Amit, last year Q2, there were erratic monsoons and it was not widespread compared to current year. In this quarter, it was a very widespread and very good monsoons, because of which the demand has been impacted. So even after that sort of a demand, we were able to demonstrate that we will be able to sell merchant of 300 MUs in this quarter with a lower profitability.
Right. Yeah, for that. And anyways, I think now just one more number that I would like to understand. Earlier, when the Brent price was around 85, we used to say our effective cost would be around 6.5 or so gas cost. So now with this Brent price falling steeply, where does our gas cost stand per unit?
Get the $75 as a Brent. And roughly it will be 75 and about 4 rupees 50 paisa.
No, I think Amit, so I think our long-term contracts are linked with Brent, so 3-month dated Brent. But for spot cargoes, they are typically sort of fixed rate prices. I'm not able to get clear understanding on what is your question. You can't directly compare Brent with merchant cost of fuel. Long-term contracts are linked to Brent, but for merchant we typically book spot cargoes and then we tend to convert that into fixed rates also. So effectively we'll have to look at it on a MMBTU basis.
Right. Okay, got it. Because I was just trying to compare it with the slope, because the Brent was correcting. Then I thought probably we'll have lower gas cost and lower pricing probably to.
That you are right. That is for our long-term contracts, which are typically for our PPAs which we have.
Got it. Yeah. Thanks for clarifying. Thank you. Those were my questions.
Thank you. Participants, You may press star and one to join the question queue. The next question comes from Sumit Kishore from Axis Capital. Please go ahead.
Good evening. Thanks for the opportunity. Just one question. Of your total contracted capacity of 2,149 megawatt, is it correct that PPAs have been signed for the entire capacity except the REMCL 100 megawatt?
So renewable, you are talking about renewable capacity?
Yes. The contracted 2,149 megawatt, excluding the, I think REMCL, it seems that PPAs are signed across the board, right?
So renewable, as far as renewable, about 1.5 gigawatt operational capacity is completely tied up, and about 3 gigawatt under construction. Out of it, 3 gigawatt, about 200 megawatt is untied up. It's meant for the merchant. Rest is either tied up, PPA is signed, or the LOA is received.
Okay, no, so I was referring to slide 15, where the contracted capacity is 2,149 megawatt. Out of that, only REMCL shows that the SCOD is 24 months from PPA. So is that the...
I think you are right, Sumit. PPA is pending for REMCL, and as Saurabh explained, for air power, since it's a merchant capacity which we are putting up, there is no PPA.
There is no PPA.
Every other contract we have already entered into PPA.
Got it.
And REMCL should be, let's say, in a 2 months or 2 months
In a
time.
month or 2 months it will be signed.
Okay. That was my only question. Thank you.
Thank you so much.
Thank you. A reminder to all the participants, if you wish to register for a question, please press star and one now. The next question comes from Anuj Upadhyay from Investec Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity, sir. So just want to get your sense on the reimposition of Section 11. It has been extended for the thermal, but not for the gas-based station. So want to know your view on this, and if you can elaborate more on the recent PSP tie-up which we did with Maharashtra, that would be helpful, sir.
So in terms of Section 11, it is during the summertime it was imposed first time for the gas-based power project. So thereafter they haven't got renewed also. So we'll have to see next summer how the next summer will be. But and as far as the PSP capacity of 2 gigawatt is concerned, it's a 40 years contract we have, and about 85 lakhs per megawatt, 85 lakhs per megawatt per annum is the rate fixed cost. And the power will be provided by the MSCDCL, so we don't have to worry about the power. And it's a 5-year, total 5 years of continuous supply, and 3 years is optional. They will schedule it. And it will be cycle loss is about 25% is cycle loss is envisaged. It's stipulated basically, meaning maximum size cycle loss of 25%. That is what the contract is, and there will be 2 gigawatt of contracts. We have signed for 40 years.
And Anu, just to add to what Saurabh said on the earlier question of yours in terms of Section 11 not being extended to gas-based power plants, typically if I look at gas-based power plants in the country, apart from us, a lot of gas-based power plants are slightly costlier than coal-based power plants. So typically on a FIFO basis, if you look at it, if demand is higher, then Section 11 typically would be available on gas-based power plants, but if demand is lower, I think then first port of call would be for coal-based power plants to be operational under Section 11, and then if it surpasses certain amount of demand, then typically would be on the gas-based power plants, because it will be looked upon from the entirety rather than on one particular plant. So all other gas-based power plants are slightly costlier compared to coal.
No, agreed, Rishi-bhai. So would it be fair to assume that, considering that the Section 11 can be imposed only mainly during the peak time period, say 4 months of the summer, and then probably it may get extended for, say, September, October, probably, I'm saying subsequent year as well. So DGen at most can operate at around 35 to 45% kind of a PLF in the best case scenario, I'm saying, or even that is on a slightly higher side?
Anuj, I think giving you specific numbers is very difficult because we also would, it will be just putting an estimate. But what I can tell you is that if you look at our Q2 numbers, DGen has shown a higher PLF compared to Q2 of last year. Our merchant volumes are also higher compared to last year, even though the prices were lower. So whether Section 11 is imposed or not, I think we are in a position to run our plants without Section 11. In terms of profitability is concerned, I think it's a factor of what are the prices available in the market. And even at such subdued prices which we have seen in Q2, we have been able to make profits. Now those profits may not be significant compared to what we have seen in Q1, but typically running plants in Q2 where there is a demand is pretty low, that also is I think is a positive sign. I think that's what I can tell you. In terms of percentage PLF, very difficult to give you any guidance on that.
No, fine. It's helpful. Thank you.
Thank you, Anuj.
Thank you. Participants, you may press star and 1 to ask a question. The next question comes from Sumit Kishore from Axis Capital. Please go ahead.
So I just had a follow-up question. What has been the total capex that you have incurred so far, against the renewable portfolio expected project cost of 19,316 crore so far? And that's the first question.
So, Sumit, we don't have those numbers against 19,000 crores. What we have spent on a broad ballpark number, I think we would have spent around 1,500 crores. But exact numbers, I can give it to you offline. As of now, we don't have that on hand. Cumulative number we don't have right now.
Okay. So total capex that you have incurred in first half of the year at a consolidated level would be how much? This is 15 billion is only for RE.
So, sorry, you're talking about the consolidated H1 capex which you have spent?
Yeah, so 15 billion is the RE capex that you have incurred so far for under construction project. What is the total H1 consolidated capex also if you have?
Yeah, I'll tell you. So for renewables, for the H1, we have spent around 650 crores in the renewables part of it.
Okay.
For license and franchise put together, we have spent around 700 crores and some 40 crores balance on other capex side. So if I look at the overall capex number, around 1,400 crores of capex which you have spent in H1.
Okay. So just one observation that I wanted to clarify. If I look at capital work in progress in the BSE filing, as of 30th September 2024, it is 2,143 crores, and as of March 2024, it was 2,472 crores. So CWIP seems to have come off in the first 6 months. So I would have thought that they should have gone up.
No, I think, Sumit, so that's because we have also commissioned around 247 megawatts of capacity for our TPLD 300 megawatt project. Partly it is because of that, and partly because our license distribution also would keep on capitalizing or commissioning certain projects.
Yeah, very clear.
It is because of the capitalization only.
Capitalization. Okay. Thank you.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Participants, if you wish to ask a question, please press star and 1 on your touchtone phone. The next question comes from Mahesh Patil from ICICI Securities. Please go ahead.
Yeah, hello sir. So my question is on the other income for the quarter, which seems to have gone up to around 125 crore on console. So, any color on this? What has contributed to this increase in other income?
It's a normal increase, not, I would say, it's 108 to 125. It's a normal increase. Nothing else, I would say.
Okay.
Mr. Patil, you have any further questions?
No, thank you.
Thank you. Before we move on to the next question, a reminder, you may press star and one to ask a question. The next question comes from Sagar Gandhi from Invesco Mutual Fund. Please go ahead.
Yeah, good day, sir. My question is on the renewable portfolio. So while we are planning to expand it to 4.3 gigawatts over the next 3 to 4 years, can you highlight or give a broad perspective on any challenges that you face for evacuation of this upcoming capacity?
So if you look at the renewable portfolio, challenges will be the land acquisition, evacuation. These are the main challenges. But as far as our portfolios are concerned, about 80% land is in possession, and all first connectivity approvals are in place because those are the things. First, we work on those things, and then we participate in the project. So these are the things status as far as we are concerned.
No, so out of our under construction 3 gigawatt of renewable capacity that is, in pipeline, are you trying to say that all of it is, has got transmission access, or the transmission access will be there by the time this portfolio is ready?
So, Sagar, what we do is we keep on acquiring land. So last 2 years, if you look at it, the 3 gigawatt which we are looking at was built effectively in last 9 months. But before that also, even though we were not winning some bids, we kept on acquiring land which provided good PLF in terms of solar or wind. Along with it, we also kept on applying for connectivity approvals. So effectively what has happened is for this 3 gigawatt which is under construction, we have around 80% land which is already available. As far as evacuation is concerned, stage 1 connectivity approvals are there for all the projects which we have. And we also keep on looking at additional land parcels and connectivity approvals as and when we keep on getting new projects, we'll be able to utilize those connectivity and land parcels which are there or which we have acquired over a period of time. So effectively, we have identified these two as a major, could be major roadblocks for a renewable project, and we try to mitigate those risks by taking without any project in hand, we try to keep those land and evacuation ready. So as and when a new project comes in, we are ready with that.
Okay. And sir, my subsequent question is on the green hydrogen side. So while many players are figuring out on the manufacturing of the electrolyzer side, so what steps we have taken on that segment, and what is our broad roadmap in that direction?
No, you're talking about green hydrogen, right? So effectively, we have won 18 KPTA of green hydrogen under the PLI scheme. Right now, we are trying to find out a commercial endpoint in terms of the price of at which we can sell right now and what are the costs at which we can generate. So unless we are able to get a clear answer to that, we have not committed any capital under that. As and when, so we are working on that. As and when we get a clear answer on both these points, I think we'll be committing the capital. But to give you any perspective on that right now is difficult.
Sure. Sir, any tie-ups that you may have done on the electrolyzer side that you may want to highlight?
Electrolyzers?
Yes. Because that is a precursor to manufacturing of green hydrogen.
That's right. So, Sagar,
what capability we have, or are we tying up with some global players for building that capability? Yeah.
No, correct. So I think that would be a second stage. As and when we decide to commit on this capital for green hydrogen, then we'll be looking at electrolyzers, locking in electrolyzers and renewable capacity. But as I told you, we are still working on the end use in terms of economically viable end use and the selling price. So once we have a clear view on that, before that we'll not be putting in any orders as of now.
Sure, sir. Thank you. That is it from my side.
Thank you. Participants, you may press star and one to ask a question. The next question comes from Mohit Kumar from ICICI Securities. Please go ahead.
Hi. Thanks for the opportunity. Pardon my, I joined late, so I may be repeating the question. But my question is on the pumped storage hydropower plant. So where are we in terms of, they're giving the orders, and what are the timelines you're looking at? And what is the kind of capital cost you are expecting?
In terms of pump storage, we are at the pre-feasibility study is completed. TUR has been received from the MOF, and we have appointed the agency for the EIS study. And the letter of award is also received. So from 2 gigawatt capacity from the MSCDCL. So the cost will be roughly about 4.5 to 5 crores per megawatt. That is what our current estimation is.
So much identified the site, right? So what is the timeline you're looking at? I think I think PP allows you 48 months. Am I right? To commission?
Yes, 48 months for the commissioning period. The late of PPA.
And have you signed the PPA as of now, or is PPA still to be executed?
Sorry, we are not able to hear you properly.
So have you signed the PPA, or PPA is still to be executed? PPA?
No, I think it will be done in some time.
Understood. Okay, sir. Thank you. That's my question. Thank you.
Thank you.
Thank you. Participants, you may press star and one to ask a question. As there are no further questions from the participants, I now hand the conference over to Mr. Saurabh Mashruwala for closing comments.
Thank you so much for joining Torrent Power's earnings call. Thank you very much. We wish everybody to stay safe and healthy. Thank you so much.
Thank you. On behalf of Torrent Power Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.